How a sell-off in U.S. commodities provides headwinds for Terra's Luna 2.0 price. Terra, Luna, prices coming under scrutiny as the last asset class set to fall from recession fears and inflation persistence rolls over. After the stock markets entered a bear cycle and bonds already took a beating, the last castle standing is the commodity supercycle. As prices have risen higher, demand has been fading, resulting in an oversupply in certain commodities, making the elevated prices unjustified and triggering a sell-off in the asset class, which is spilling over to a flight into cash, with cryptocurrencies seeing another exodus of investors. Terra price sees bears drilling on $1.937 after Luna price was able to pop back above the level following the completion of its bearish triangle from last week. After almost every asset class had its correction, the last one left standing was commodities, which were rallying in their super cycle. Now sentiment is turning, however, as elevated prices have become unsustainable for specific production processes and have thus started to see demand fading while stockpiles rise. Luna price is undergoing another exodus of cash, linked to the correction in commodities, with copper, WTI crude oil and iron ore all selling off multiple percentage points as demand starts to fade, but inflation remains elevated. The commodity sell-off is another indication a recession could be around the corner. With that flight into cash, a liquidity drought is at hand in Terra price, which could see a break below the 50% Fibonacci level at $1.7662 and a drop to $1.3494 follow, near the 61.8% Fibonacci level, losing 35% in total. The upside potential for Luna price comes from risks to the dollar as most commodities are quoted in dollar prices. The intrinsic value of the dollar is at risk should there be a recession. The U.S. is the world's largest economy, but it is still, nevertheless, vulnerable due to its high debt and large number of households holding credit card debt, which becomes heavier in a recession with higher rates and repayments due. So luckily, the absent dollar strength is not triggering a falling knife, and could see a possible pop back towards $2.6987, which is the 23.6% Fibonacci level. Terra Classic, LUNC, rises 1.14%, underperforms the crypto market Tuesday. Terra Classic, LUNC, has been relatively more volatile than the crypto market according to a recent analysis of the market. So far Tuesday, the digital money has increased 1.14% to $0.00059558606662. Investors Observer gives Terra Classic a high volatility rank of 99, placing it in the top 1% of cryptos on the market. The volatility gauge tracks this means that the rank represents its recent trends and isn't overly influenced by a sudden spike or two in volatility. Lunc's high volatility reading is coupled with a low reading on the risk-reward gauge, meaning that the coin has relatively wide price swings and is well protected from price manipulation. Terra Classic price is in a good position going forward. With support set at $0.000567787851522214 and resistance set at $0.000613326615037865. This leaves Terra Classic with room to run before facing selling pressures. L-Bank co-founder claims Luna crash caused current crypto winter. Claims that the extreme crypto market conditions currently happening were caused by the collapse of Terraform Labs Terra, Luna, and Terra USD, UST. In sharing what he thought about the present crypto winter, Jonathan Chan blamed it on the Terraform Labs and its notorious algorithmic stablecoin and crypto. Notably, the then Terra USD, or UST, collapsed when investors fled the stablecoin after prices of most digital currencies plummeted in May. In its downfall, UST brought its sister token Luna down with it. Following the implosion of LUNC and USTC, all kinds of panic in digital assets surrounded the space. Some crypto analysts believe that the incident dragged down an already bearish market, which today can still be felt. According to pieces of information fed to CQ, Jonathan Chan echoed this sentiment that Luna caused a lot of investors to lose money, initiating the crypto winter. Jonathan Chan also thinks that Terraform Labs closed its services to avoid taxation. Interestingly, multiple reports have also claimed that Do Kwon's Singapore-based company shut down its South Korean branch last year to allegedly evade paying taxes. While the real reasons behind Terraform's close down have not surfaced yet, South Korea's National Tax Agency handed the company a hefty $78 million penalty for tax evasion charges. Lastly, the L Bank executive speculates Terraform is to blame for the current bearish market because Do Kwon's company deliberately dumped the price of Luna since they are aware that the liquidity was huge and it was easy to short Luna. However, Jonathan Chan clarifies that all these are yet to be confirmed and just hearsay at this point. The Terra blockchain has since officially halted, and UST remained depegged from the US dollar. Meanwhile, the original Luna has been rebranded to Terra Classic, which is almost down by 90% from its all-time high of $18.87. Despite the crash of Luna, several exchanges showed their support for Luna 2.0. L Bank was one of the major crypto exchanges that welcomed the launch of Terra Classic, LUNC. On May 26, Do Kwon himself acknowledged the L Bank support of the launch of Terra 2.0 and its subsequent token airdrop. Before the Luna crash, there were around 350 million Luna tokens in circulation. In the wake of Terra's collapse, many investors are asking, is a Luna crypto recovery possible? At the beginning of May, the Luna token was trading at over $80. Now Luna is worth $0.00014441. Can Luna recover from this? It's possible. But first, it's important to understand why Luna crashed to get a realistic idea of how Luna can recover. Why did Luna crash? On May 5, Luna hit a price of $88. 1 week later, it had fallen 99% to a price below $1. Just a few days later, it had fallen 99% yet again and is currently trading at $0.00014441. How and why did Luna crash? Cryptocurrency prices are determined overwhelmingly by supply and demand. Yet the biggest factor in Luna's collapse was inflation. Before the Luna crash, there were around 350 million Luna tokens in circulation. Now there are over 6.5 trillion. The Luna supply has increased around 1,857,000% in just a few weeks. This hyperinflation, more than anything, is what caused Luna to crash in price. The exact details of why Luna crashed are to do with the algorithms that underpin Luna and the Terra stablecoins like Terra USD, UST, and others pegged to different world currencies. Terra USD and Luna were interchangeable, allowing UST holders to exchange 1 UST and mint $1 worth of Luna, and vice versa. This mechanism created arbitrage opportunities whenever UST drifted to the downside or upside from its $1 peg. No one knows whether there was a specific attack on Luna, there are rumors. But in short, a huge volume of UST was rapidly exchanged for Luna, creating never-before-seen hyperinflation. Will Luna recover? The above helps to put the question, will Luna recover, into context. If Luna were worth just $1, it would have a market cap of $6.5 trillion. That's more than 5 times bigger than the entire cryptocurrency market, currently $1.24 trillion. The only way for Luna to recover to a price of $80 would be to burn enough Luna tokens to bring the circulating supply back down to around 350 million. This method has been suggested already by the Binance CEO, Chanping Zhao. However, the Terra founder Do Kwon has a different proposal. Do Kwon instead intends to fork a new Terra blockchain without UST, with new Luna tokens airdropped to disaffected investors. The vote on a new Terra blockchain is expected to be decided on May 18 and, if successful, the new Terra blockchain will launch by May 27. What will happen to the original Luna token, to be renamed Luna Classic, LUNC, is yet to be seen. What's a safer buy than Luna? BUSD has emerged in recent days as the most secure and transparent stablecoin in the crypto market. BUSD has leapt into 7th place in the crypto market cap rankings in the last few weeks. UST attracted huge volumes thanks to its Anchor protocol savings platform, which paid up to 20% APY. BUSD does have a 10% APY savings protocol, but such high returns are only possible for deposits under $2,000. Instead, the cryptocurrency Evergrow coin has emerged as a great alternative to Luna, as it pays out BUSD rewards daily to investors. Since September last year, Evergrow coin has paid out $37 million to investors thanks to a 14% transaction tax on EGC by sell orders. 8% of this is distributed every 6 hours to investors. On a regular trading day of around $3 million volume, this means $240,000 is made available as passive income in BUSD. Evergrow Coin is one of the most transparent cryptos in the space, with the founders only receiving payment via the same BUSD rewards mechanism as other investors. You can view their wallets on Scan. An ambitious roadmap will see an NFT marketplace, content subscription platform, crypto wallet, and metaverse integration using Evergrow Coin as the native token before the end of 2022. With that, we've come to the end of the video. Kindly subscribe and click on the bell icon for more interesting daily cryptocurrency predictions. If you find this video helpful and interesting, kindly consider liking and sharing our videos with your friend. If you have any questions or contribution, kindly drop them on the comment section below. Disclaimer. Please keep in mind that this isn't financial advice. We take no responsibility for any loss or damage caused by your actions or inactions as a result of watching any of our videos. You acknowledge that you use the information we provide at your own risk. Thank you for watching, and see you in the next one.